Gold's 50-year prison break. Why China is deploying $4.5 billion right now. While everyone's obsessed with AI stocks, gold just did something it hasn't done in 50 years. And Chinese miners are deploying billions to grab what's left. You're witnessing one of the most violent wealth creation events in mining history. In just 4 months, gold miners added $90 billion in market value. And now there's even more. Here's what's terrifying the mining CEOs. The acceleration is just beginning, and there aren't enough quality assets left to buy. This is the story mainstream media completely missed. For about 45 years, gold was trapped, stuck below its inflation-adjusted ceiling like a pressure cooker building steam. Then it didn't just break out, it absolutely shattered through. Technical analysts call this a confirmed breakout. But what it really means is we're watching one of the biggest feeding frenzies in mining history unfold in real time. And the numbers as of today are staggering. Here's the 50-year prison break. And let me show you what just happened. For nearly half a century, every time gold approached its inflation-adjusted high from 1980, it got slammed back down. 45 years of rejection. Think about that. Entire careers came and went with gold stuck in this prison. Then suddenly, boom. Gold didn't just inch past resistance, it exploded through like a freight train. And most investors are missing the size of the move. In the first half of 2025, listed gold producers added $228 billion in market value, pushing the group from $234 billion to $615 billion, the fastest wealth creation the sector has seen in a generation. That's billions of dollars in new wealth created. But the really insane part? Look at what happened since December. $228 billion in market value created in just 6 months. The acceleration is getting violent, and there's a simple reason why. The profit explosion nobody saw coming. Here's the math that's driving CEOs crazy. While gold broke through $3,000, these mining companies are delivering amplified returns due to their natural leverage to the gold price. For every 1% gold moves, quality gold miners typically move 2 to 3% or more. And that kind of margin doesn't go unnoticed. Every single ounce pulled from the ground becomes incredibly profitable. Mining companies are suddenly sitting on cash reserves they've never seen before. And when companies have excess cash, they typically do one thing. They go shopping. And Royal Gold just proved it. They dropped $3.5 billion to acquire Sandstorm Gold, one of the biggest royalty mergers of the decade. And they paid a 17% premium to get it done. Why? Because they see what's coming. Royal Gold's deal though, that's just the beginning. In a single transaction, China's biggest gold miner wired $1.2 billion to Kazakhstan, one wire transfer, overnight. And Bloomberg's reporting that Chinese gold producers are on their biggest acquisition spree in a decade. They've already raised nearly $3 billion in Hong Kong, with another $1.5 billion in the pipeline. Gold fundraising just hit levels not seen in a decade. Companies like Zijin Mining are sitting on massive war chests, and they're deploying them aggressively. The CEO of Zijin recently stated, "There are more Chinese deals to come." Translation? This acquisition wave has only just begun. And here's why this matters. Chinese miners aren't waiting for Western market sentiment. They see gold going higher, potentially much higher, and they're positioning accordingly. The perfect storm forming. 3 massive forces are converging right now. First, major investment banks are calling for significantly higher gold prices. Goldman Sachs, for instance, has just suggested gold could reach $4,000. Though of course, predictions are just that, predictions. Second, central banks globally are accumulating gold at a pace we've rarely seen. They're not trading it, they're vaulting it, effectively removing supply from the market. Third, and this is crucial, there's a shortage of quality mining assets available for purchase. After years of underinvestment, the pipeline of good projects has diminished. So when buyers show up with billions, competition is fierce. Meanwhile, many retail investors remain focused on tech stocks, while potentially missing the significant shift in commodities. In just 31 months, the market value of the world's listed gold producers has more than doubled. That's not typical market movement. That's a potential regime change. Now, gold's 50-year pattern didn't just break, it shattered, and now we're watching the consequences unfold at remarkable speed. $300 billion in new wealth created, Chinese miners deploying billions in acquisitions, major miners paying substantial premiums for quality assets. When patterns this significant break, the moves that follow can surprise everyone, bulls and bears alike. The question isn't just whether gold goes higher, it's whether you'll recognize this moment for what it potentially represents. The early stages of one of the most significant wealth transfers in commodity history. Remember though, gold is volatile, past patterns don't guarantee future results, and this isn't financial advice. Always do your own research. If you want to track this gold story in real time, hit subscribe, ring the bell, and give us a like. Stay tuned for our next video.